Jade Capital Partners midweek report. Hi, my name is Rob Clayton. The Australian dollar still holds to a negative settlement after the bearish outside range day on Friday. The second candle came in overnight quite heavily to the downside and found support briefly at 94.90, 95 and then staged a mild recovery. In terms of how the market is set up for the next few days, especially into the FOMC coming this week, is that we are still looking for a further down trek towards 74 cents as an objective, or around 74.0515, before staging a recovery. In light of the recent breakdown, Henny advances now up towards the resistance, currently holding around 70. About 75.80 towards that 76.60 level. Should find heavy supply there or congestion area. So I'm still comfortable to hold short positions into this week and look for any target towards 74 cents to start taking my short position and closing it out. The euro, since the rejection on Friday at 1.1360.65, and then again the outside range day confirms the move to the downside with the awaited target seen at 109.50. I still in view that any attempts to recover should fail towards the resistance around 111.80, and as we are looking at the moment, support 110.50 and then down, as I say, towards that objective. Towards this region of 109.50.75, I'll be taking any short positions back and reassess from there. Well, dollar yen impressively pushes higher. Firstly on Friday with the outside range day, and then followed on by another bullish candle breaking above that 102.60.70 resistance. Now gives further scope to the upside and looks for an objective around about 106, which is the highs here and the peaks here. While that view holds, any pullback towards the support seen roughly around 102.40 should find demand there. However, what would negate this view of 106 is if we see a move under 101.80. Sub there then would reopen the downside towards that 99.60.40 objective. So across the board so far, as you can see, that the US dollar is actually in triumph of its move at the moment since Friday, and all the indicators are supporting pretty much the directions that I'm looking for. So in this case with dollar yen towards that 106, with the immediate resistance coming in around 103.40.45, and then looks up towards 104.10.25. Sterling, if we go to a 4-hour chart, you can still see here that since the break under 131.60, the market is pretty much coasted sideways and holding above that support at 130.20.25. In light of the weakness and also with the outside range day, suggests further downside potential once we get a break of 130.25 and look back towards the lows seen around about 128.45.55. Any advances should find resistance again towards that 131.60. All eyes on gold at the moment, especially with the fact that we've broken that 133.28 level. In the next few days, I do expect to see, or the next 24 hours, I expect to see a challenge of this level of 1300. It is the bullish foundations for this whole move, which goes back to pretty much near Brexit. And you can see here that while this pattern now looks to break the downside, under 1300, I see a $50 fall. And as you can see here, we'll put it pretty much in focus towards that previous demand that took gold up 100 points. Do keep note of this level this week of 1300, and as I say, if it goes through that level, then I don't see any technical support until around 1250. On the upside, resistance comes in roughly around 1322, with further resistance seen around 1328 to 32. The S&P and also the SPY showing some weakness. And now, first of all, looking at the SPY, we're currently broke lower, tested that support as seen at 53.95, and that's actually responded quite well, and demand is actually following in at the moment. In light of how the market's set up, I feel that further weakness will come through to the downside, and this mild buying phase that's coming through at the moment in late this afternoon should actually fade away. And the real risk then is that if we get a break beneath 53.95 or 90, opens way to the next target of 53.20, which is where I'm more inclined, and technically it is supportive for that move down. The S&P coasting still sideways, even though we have actually had a bit of a stab to the downside just recently, but nevertheless the pattern is actually quite negative. On the 4-hourly, you got a cut of the stochastic, you got the ADX telling you that the trend is actually quite intact to see a further move down. So initially I'll be looking for a move towards 21.55 with the resistance capping around 21.80 to 82. In light of the downside potential, since the recent break of 64, I am looking towards 21.22 as an objective. So we'll see if that comes through in the next few days. And to wrap up with oil, still looks like to me that the market is bearish, and we are looking for a further fall towards an objective holding at $44 a barrel, with any advances looking for resistance to hold roughly around about 47.5 to 48. Well, that's a wrap. Thank you very much for listening, and I hope you enjoy the rest of the week.